Sunday. Shred Lords, what's good? Boys and girls. How we doing? How the heck we doing? Someone catch me up, man. Hey, y'all check out that latest video today? Y'all check out the latest video for today? What we talking about, man? Hey, we're about to low key. We about to go crazy. Today ain't no regular day. We about to give you guys such inside goop right now. Such inside. We might as well get started. If we gonna do it, we gotta do it right. If we gonna do it, man, we gotta do it right. What's today? Day 102? Hold on, child. I'm turning the camera on in a second. Hold on. I'm just getting the vibes right. All right, now let's roll. Wow. I was put hip to this song 24 hours ago. 24 hours ago. I've had it on repeat since. This song is so freaking good. Like that freaking good. It's just wow. And then the next one after this is also banger. Okay, so that song, Edwin, well, first and foremost, what the heck is up, homies? How we doing? Good to see you, Edwin. Good to see you, Alan. The next one is called All the Love, and that's good. Sorry, VOD watchers, it's gonna be muted when you watch the VOD. Wait. Okay, so does that sound like Daft Punk to you guys? It sounds like Daft Punk, right? Doesn't it sound like Daft Punk? In my opinion, wait, let's actually get that right. Let me see. Andrew Troutman. That's a good. Andrew Troutman. Daft Punk. Oh, it's a different guy. Completely different guy. Okay. All right. Still vibes. All right, here we go. Let me know if you guys like this one. A little Sunday grind. Parker, what's good? I use this to get locked in. Wait, fire? You guys really like it? To earn, we are out to earn. This is so good. This is so good. On and on and on and on. Dan, what's up, Top Dog? Akil, what up, Top Dog? Can you give a quick summary of what this stream is about in a couple of sentences? What do we do here, guys? What do we do here? What would you guys say we do here? Somebody answer that. What do we do here? I think we vibe and dance and listen to good music. You guys might have a completely opposite opinion. What are we buying today? We are doing an actual live diligence on a real deal opportunity, and I'm going to build a complete diligence checklist and playbook from scratch for this guy. He's got a live deal. We're about to get this thing rocking and rolling. But Dan, most of the time, we're just like making smart. Best way I can describe it in a couple of sentences. If Warren Buffett was a streamer, it'll probably look like this. You know? That's probably the best way to describe it. If Warren Buffett was a streamer, it'll probably look something like this. Is that a fair assessment, guys? We buy businesses on stream. We look at public equities on stream. We invest on stream. We diligence on stream. We listen to earnings on stream. We run a private equity, a hedge fund, a holding company, and a permanent capital vehicle, all here on YouTube. What's happening, boys? Let's get it. All right. Rapper, want to hop in the mix? You can pull that chair there, and we can chop it up. Let's be real about it. I mean, I don't really care about how you feel about it. I mean, I don't even really have a real hobby. Hey, chat. We got a mock deal we got to do with my boy Brad. Hey, chat. All right, so first and foremost, how's everybody doing? How's everybody? We doing good? We doing good? If you guys haven't, here. Also, sound test. How does it sound like this? Can you hear me still or no? Chat, can you hear me? I think you can hear me. Now try to say something, Brad. See if they can hear you.
Yo, can you hear me?
How does he sound? He sounds good or not? John A's here. John A, what up?
Oh my God. Yo, that's love.
John A, what's that? Hey, Jack, I told you I'd say hi to John A. John A's our little sister, man. John A's like our little sister. Buffett partners. That's funny. That's funny.
Yeah, I think the best thing we can do here, let's do a mock deal.
Yep.
To teach the chat how to think about actually going through a whole diligence checklist.
Okay.
Right. And I think it'd be good to learn, Kenny, how you think about it, because doing private equity and venture capital, there's one way we look at it, but looking at it from a pure private equity standpoint, buyout from a microcap standpoint, I think is super important for the group to understand. So we should treat this like a mock and understand how people think about it.
Okay. All right.
Let's do it.
Richard, what's good, man? All right, chat. I'm gonna do this from scratch. We gonna do this whole thing from scratch. Grab Did you see 154 Partners close? 2X Tech Ops guys? LCAT C 2024. What up, Todd Dog? Yeah, that's the gaming fund, ain't it? I work with one of those dudes. I think I saw it on LinkedIn. Oh, Neil Burns, what up, Todd Dog? Alan is here. Richard is here. All right, hold on. Wait, can y'all see? Y'all can't really see us like that though. Here, let me do a little maneuvering. Alan, you trying to build a model? Yeah. Alan's trying to build a model for us. All right, we got this. Let me duplicate. Let me see. Okay. Oops. Okay. Okay. Whoop. How do I get this thing? Maybe like this then? Just do it like this? Okay, that's better, chat. Y'all can see both of us? I just want to make sure y'all can see us. Sheets over Excel? It's up to you guys. You want it on Sheets? You want it in Excel? I want to do Sheets. So you guys, if you guys wanted it, you know? I wanted to do Sheets. So if you guys wanted it, you guys can freaking have it if you wanted it. Edwin, remember when we did something like this for your business? We did okay, wait, chat. Remember the last one we did? What was the name of it, Edwin? It was Project Roof. Was it Project Roof? What was it? Hold on, I gotta put it off screen just showing the proprietary information chat. I forgot what it was. It was something. Let's see. Project. I totally forgot what it was. Roofing business? Oh, was it roofing business management meeting agenda? Oh, Chat Capital Business Buying HQ. Oh yeah, here it is. Look at a different stream. All right, chat. This is it was Project Raccoon. Yeah, Project Raccoon. Yeah. Wait, this is sick. Project Raccoon for Chat Capital purposes only. Guys, this was in January. This is like 3 months ago. Damn, y'all getting old. We had like a deal timeline for when he had his first management meeting to all the things he had to do after that, sending thank you notes, path forward roadmap, sharing preliminary data requests, the second management meeting, hiring QOV, placing a first round bid, IOE, and then for the key diligence areas, focusing on, okay, this is really good. We're gonna use this as a starting point for this one here. So for the key diligence areas, for a business like this that did trash bin cleaning, you got to really understand the equipment side, the customer side, the go-to-market, competition, costs, legal, moat, financials, background checks, commercial, voice of the customers, operational. And here was the data request list. Nice. This is fuego. And then the first management meeting topics, second management meeting. Ooh, and then the go-to-market playbook. Oh, snap. Wait, this is solid. Good conference list. Yeah, we cooked. I'm not gonna hold you up, bro. We cooked for this one, Edwin. For Project Raccoon? That's good, dude. I hope you used it. Edwin, I hope you used this. This is a really good freaking thing here. This is a really good freaking thing. All right, let's make another one then. Let's make another one, shall we? What business type, Bradford?
Let's say let's just do like a contractor business. Do like a
Contract, like home services, maybe.
Yeah, let's do like a home services. Services.
Okay. Chat Capital, and then project. What's a project name?
Project Sunday.
Ooh, Project Sunday. Yeah. Hey, I like that. Okay. Industry, home services.
I'm gonna jump in this with you.
We about to lock in. Okay, so okay, project.
Go step by step.
So I want to essentially create a living document that, if you wanted to, like, go visit the business from the time you first meet them to the time you wire them a check, and you wanted to get the whole deal closed, this living document gives you everything in terms of the questions you need to ask, the places you need to go, people you need to invite to the trip with you, and the answers you need to seek, so that when you do ultimately want to buy it, you've flipped every stone.
I like that.
You
Let me
know?
ask you a question. Let me ask you this question. Challenge me on this.
Mm-hmm.
Do you think we should break this up in quarters or innings or something?
Ooh, phases.
Like phases?
Yeah. Okay. Okay, how about this? Let's outline the phases first.
Yeah.
Can you guys see? All right, you guys see? Remember to save it? Boy, it's 2026. Google Sheets already saves. Lock in. What you on, Windows 7? Just kidding, Richard. All right. Okay. Phase one, sourcing. Phase
Yep.
one, sourcing, screening.
Yep. We gotta get some ice cream after this.
Oh, I'm so down.
I'm down.
Somi. The one we had before, or a different one?
What is that? Is that the? Oh yeah, no, it's a different one. It's a different
Okay.
one. Yeah, it's a different one for sure.
You were rocking with it.
No, that was good. It was good. I liked it. I liked it. I just, I want like some like ice cream from a cow. You know what I mean?
Ice cream from a cow.
Yeah, ice cream from a cow. I think that'd be a smart decision.
All right. So the first phase is gonna be sourcing,
Yep.
and then the second phase is pre-IOI.
Yep.
Third phase, I'd say, is the waiting phase,
Good call. That's good. Yeah.
and then the fourth phase is post-IOI, and IOI stands for indication of interest, or LOI. We'll call it LOI since most people know LOI.
I think the IOI is a good one though.
Yep.
Yeah.
And then this one is pre SPA, or like pre, right?
Yeah. Okay. I see what you
Pre-purchase
mean.
agreement,
Yeah,
right?
yeah,
Because there's two different things you want to go between there and there. Like,
Should we segment the LOI IOI difference just because the IOI is a real thing if they're in a process versus like because typically the IOI, you challenge me on this, but typically the IOI they're trying to figure out if you're like even a real deal person to be in this process or not.
yeah,
It's kind of weird. You might not even meet the management team yet sometimes.
yeah.
For the IOI. Should we just keep it LOI or what do you think?
I think we keep it like
Okay,
this.
perfect.
Yeah.
Yeah.
So
Okay.
you don't want to go like
Keep
too
it simple.
too crazy with it,
Yep.
right? So like the instead of overview, I'll say objectives. I think it's helpful to frame it like this in terms of like what are the key objectives across these different phases. Like
Yeah.
when you're in this phase, if there's one thing that matters,
Yeah.
what is that one thing that matters for your deal, right? Like when you're in the sourcing phase,
Yeah.
I think the sourcing and screening phase, I think like the number one thing that matters most,
Yeah.
in my opinion,
Yep.
is identifying a best-in-class asset worth owning in this category, right? Picking a winning category and then finding the best-in-class asset that you want to own in this category and geography,
Yeah.
right? So I would type that in. So pick winning category,
Yep.
geography,
Yep.
and identifying the number one asset to own in this space.
The only other thing I add is after geography, probably size.
Yeah. Yeah.
Size. That's good. It's good for the chat to know that.
Yeah. Oh yeah, not buying yourself a job.
Not buying
That's
yourself a
facts. That's
job.
facts.
Very important.
All right. But then also with this, you also want to unlock access. Because you can find the best category
Yep.
in the most top growing state
Yep.
that fits your threshold. Everything matters, but they don't answer emails. They don't answer your call, right?
Yeah. Yeah.
So when it comes to sourcing, like we're very dynamic. We're dynamic with sourcing. We source with bankers, we source with listings, we source with proprietary on our own,
Yep.
right? And I think if you want to pick a winning category and a top geography and the size threshold that you want, you're gonna have to fight to get access to them.
Yeah.
So like when you are in the season with this roll up holdco independent sponsor stuff, like you just want to like make sure that you understand that like am I spending time in the right region?
Right. That's true.
Right? Do
Yeah.
I only want to buy in Michigan? Do I only want to buy in Florida? Do I only want to
Yeah.
buy in California? Like, where does it logically make, like, where am I willing to extend myself intellectually in a geographic basis to where do I want to own? So, like,
Right.
understanding that. But then also, with that desire to extend yourself to a certain geography, does the macro make sense?
Right.
Is this a growing city?
Yep.
Is there talent here?
Yep.
And is there like a large enough like economic activity there as well? Next, picking a winning category,
Yep. Yep.
right? And then like, there's a lot of work that needs to go into like picking a winning. And we're gonna outline, guys. We're gonna outline like for these all the things that I'm saying right now.
Yeah.
But I just want to give Brad like a outline. Like, is this a winning category?
Yep.
And there's two ways for that. Number one, is there a track record of investors making money in this?
Yep.
Right?
Yep. Yep.
Like is there money to be made here? Like, have people done it before?
Yep.
But then secondly, like if I look beyond today, is there real, tangible runway left
Yep.
in this winning category?
Yep.
You could have found a winning category for 2016,
Yep.
right? But is this a winning category for 2026?
Yep.
Right? So you gotta identify like, is this a winning category in a geography that is convenient for me, but also has tangible like access for me? And is it in the size and threshold that matters
Absolutely.
for my structure or my investment strategy?
Absolutely. Let me ask you this question on the sourcing front,
Mhm.
just for the chat, so they know this. Is it smarter in the beginning to go after brokers, or do you think it's smarter to go after just off market deals?
I think it's smarter to go after brokers when you're very, very, very early in your journey because you need to develop pattern recognition.
Yep.
And when you are a beginner in your business buying journey, I think having the potential to look at hundreds of deals a month, you, even if you worked at Blackstone or not, like you still develop pattern recognition of whether or
Yep.
not a deal is like a good or bad deal. Like you start to realize like, wow, like why are all these restaurants 5% margins and declining revenue?
Right. Right.
Okay. Now I know
Right.
for month two, I kind of don't want to look at any more restaurants. But if
Right.
you've never worked in finance or business or investing ever,
Yep.
you can get shocked really fast.
You
Right?
know, it's really interesting because one of the things that, and it's interesting you say that, Kenny, because one of the things that I've figured out is, you know, from learning from you and how you've done this,
Yeah.
you know, you can target the brokers, but at the same time, it's still good to have a good funnel for owners off market.
Yeah.
It was so interesting coming from the venture capital growth world.
Yeah.
Founders are so responsive to LinkedIn and email. They're easier to find. So it seems
LinkedIn.
like, you know, if you reach out to a founder in venture capital, like a technology founder on LinkedIn or email, they respond quickly compared to some of these owners of these kind of boring businesses. It's kind of hard to find them.
Yeah.
So it almost seems like the broker might almost be a more effective route to get to the owner until you can start to build a pretty good strategy for sourcing the off-market deals. But I totally agree with everything you're saying, for sure.
Wait, that's solid actually.
You know what I'm saying?
That's solid.
You see what I'm saying? That's something that I've like even picked up. It's like, you know, it's like how do you kind of build a good sourcing mechanism
Yeah.
to get in front of brokers? Because typically I almost think it's like a domino effect. If you can get the first acquisition, then post first acquisition, now you can actually go off market because you have something to talk about.
Ooh.
And someone that you might want to respond, which is really interesting.
Ooh. That's huge. Merger acquisition. Alan, what are you saying? Alan just being let his intrusive thoughts pop in. Is the co-host in PE too? He's in everything. He's a capital allocator. This guy got businesses. He's got private equity experience. He got venture capital experience, growth equity experience. You ever done private credit?
No, but I work.
Okay.
I worked.
But he's worked for private credit. Hey, if there's money to be made, he probably touched it. You know?
Let's keep going.
All right. So, okay, chat. So I'm trying to think like, all right, hypothetically for you guys, for this kind of deal, like if we were all looking at Project Sunday for a home services company, like what else matters in this phase? Like for you all, if we are trying to buy a home service businesses in Florida, we want to make sure that we're picking a city or a county in Florida that's growing. We want to make sure that It has availability of businesses that fit within our threshold and size. We need to also understand and outline, like, is there an industry within Florida that fits our threshold of $1 million less than purchase price that has rising tides and that has like clear growth potential. You know what I mean? Like, here's a lesson learned. A lesson learned is that I would not go to Florida and buy $1 million business that is in the sleepiest town in Florida that has businesses that are only 50K of EBITDA, and the only industries that are there is movie rental, physical retail pop-ups, and check cashing businesses. I would not do that at all, right? I wouldn't know that that was the antithesis unless I looked at a few listings there, unless I spoke to a few stakeholders there, unless I banged LinkedIn and talked to some business owners that are there. That will give me enough clarity around. Like, don't underestimate the time that you should spend in the sourcing and screening phase to just like get a lay of the land of like catching up real quick of what's happened. Use the brokers, use the early founders that you speak to, as well as some of the other investors, to just get a recap of what's happened on that market, that category, in that geography over the last 5 years. Like, what's been happening? What have people been buying? What's hot? What do people buy that didn't work out too well? Why didn't they work out that well? Things like that, right? So like every conversation that you have, of course, be strategic with it, but every conversation that you have should build for you to understand and recap what's happened in the market so far. But then also, once you're up to speed, help you identify what you expect and forecast happen in that market as well. Hi, Kryptonite. Good to see you, bro. Yeah, we were waiting the entire time for you to show up, Kryptonite. We were waiting the entire time. We have not gotten started yet. He said, Kenny, I am here now. You can begin the stream. Thank you so freaking much, sir. We are here. Okay, you ready? It's time to start now. Okay, Kryptonite's here. You ready? Okay. All right, now, pre-LOI. So Kryptonite, Ed, Alcat, Alan. So for the an LOI is, and we talked about it in Discord all the time, guys, but an LOI is a offer letter that you share and submit to a business owner that says, I'm not contractually obligated to do this, and I'm not binding to what I'm putting on paper, but I like your business enough to let you know that if we can do a little bit of homework and get under the hood a little bit, I think I'd be pretty interested in owning your company at around this price. Like, that's like a proposed offer letter that's non-binding that says, I like your business enough to want to spend time understanding it a little bit more and try to spend a little bit more time getting under the hood to ensure that it is a business that, if I did own this business, it'll work out pretty well and that I'm protected and my downside is solid. But FYI, this is non-binding. So like the key thing, guys, is like when you guys are ever looking at a deal, make sure that you always, always, always have it be non-binding. There's a bunch of templates out there. Luke has his like AI-enabled LOI and stuff like that. Be safe, be cautious with those. But I would say it is not bad to have a lawyer review your LOI. It is expensive, but it is not bad. How much does it cost? I don't know. It depends on who you use, right? But I will say, though, it's not a bad idea if you are a beginner to have a lawyer take a look at the LOI, just to ensure that you're not submitting something that's binding, all right? Like, if there's one thing you should take away, like if you submit an LOI, make sure the darn thing is like non-binding, okay? Is it fair to submit an LOI to learn more anecdotally for a space that you're interested in? Is it ethical? See, there's two phases to that question. Okay. The first phase is, oh, Richard, how can I find a lawyer? You can join the deal team and I give you guys access to my lawyer. Yeah. Anyway, but okay, so there's two phases to that. Just kidding, Richard. DM me. I got you. The two things are, you can sign an NDA to pursue a business intellectually, to learn more anecdotally about a space that you're interested in. That is fair game if you are giving it your best shot to understand that company and see if it is a good fit for you, but you operate with integrity, and once the deal dies, you delete the files and you remove access to it. That's the terms of the NDA. That's the first one, right? So that is directly applicable to the question you're asking of if it's ethical to anecdotally get in a process to learn more about a space. The second phase is actually submitting an offer LOI. The only difference between getting information on a business from a SIM post NDA versus getting nitty gritty details of information on a business post LOI is that once an LOI is accepted, you are typically the only or a handful of parties that have intimate access to the information regarding that business. That could be like employee census, that could be customer logs, that could be all kinds of things. So from a relationship and personal integrity perspective, the owner is entrusting you with such sensitive information. And if you never had any intention at all of buying this, you just wanted to learn more about the space, I would definitely not submit an LOI to get more information, because you would have gotten all the information you tangibly would have needed from the SIM post NDA, and that should be sufficient. Anything else beyond that post LOI, you're being pretty like, selfish. So as a best practice, I would recommend handling it that way. All right, so pre-LOI, I think, like, did you just steal my pool idea? Bro, I can't even swim. I'm not investing in no pool cleaning business. I can't even swim because I got to be able to, like, if all my employees left, I got to go do the damn work myself. I can't be cleaning no pools. All right, so pre-LOI. So pre-LOI, the objective of pre-LOI diligence, and this is what I call, like, reading the SIM, writing the investment memo, going to IC, and deciding that this is a business worth, outlining. The key is, what you want to identify is this, one, a good business? Two, a good team? Three, a growing market? Four, a good business, a good team, a growing market, and then four, business I understand, and five, reasonable price. Right? Like, that's what matters in a pre-LOI stage. Like, from reading the SIM, from studying the industry, from having conversations with not their exact customers, but maybe customers of related businesses in that same geography. Do I like this business fundamentally? And I told you guys on stream yesterday or the day before, but, like, do I fundamentally like do I understand the exchange of fundamental value? Like, do I understand if break down a business into a receipt, right? Like, when you go to a business owner and you want to buy their company, ask them for a receipt. Like, ask them for a receipt that they provided to a customer. Like, that receipt should show that they provided this service, this product, or this use case at this price. And you need the diligence and understand, do I fundamentally like that exchange of value? Like, is this a good exchange of value? And then once you have identified, like, is that a good exchange of value? Who is the team and who is the leader that is providing that exchange of value? And then thirdly, looking at that receipt, do I expect this receipt to grow over time? Either the price of which I charge at that service, product, or use case, or the quantity of which that service or use case or product is sold, are any of those going to increase? And then number four, looking at the receipt, do I even know what the heck this, like, do I know what they're selling? Right? Like, do I actually know what they're selling? And then number five, is it at a reasonable price? Am I willing and interested enough to own that exchange of value at a fair and reasonable price? Were you gonna say something?
I have two questions.
Yeah.
First question is pre-meeting the team. Let's say the SIM checks out and you like the numbers on the SIM. What do you need to get clarity before you actually meet the team? What are you looking at pre-meeting the team or pre-meeting the owner?
Before I meet the owner?
Yeah, before you meet the owner, you got the SIM, you like the SIM a lot, the numbers check out, right? Like, what are you trying to understand? Like, what are you gathering before you even meet the owner?
Before I meet the team, I've done enough work to understand that this market is growing.
Yep.
I've done enough work to understand that the business and industry has a right to exist.
Yep.
right? They're just doing something fundamentally that I think should continue to persist, especially during my hold period.
Yep.
When I'm preparing for the management meeting, I want to know the narrative behind the numbers, right? Because like pre-management meeting, you likely have last 3 to 5 years of P&L, revenue all the way through net profit or EBITDA, and no business has it flat, no business has it straight up, no business has it straight down. There is a journey of revenue growth, revenue declining, EBITDA margin expansion, cash burning, or one-off things, a bunch of random stuff that's been going on in the numbers. And I can do as much Claude enabled analysis and sensitivities and all that stuff, but it doesn't mean anything if I don't understand the on the ground narrative of why things move the way they move in certain environments or seasons for the
And
business.
Let me ask you: Are you right when you see the sim
No.
and you have the P&L? Are you already trying to understand questions financially in Excel on the business, or right at that moment you take the sim for what it is, and then you want to have the meeting with the owner and start asking the owner those questions before you actually dig in more? Like, how do you think
Meaning,
about
like, do you trust their numbers in the sim?
Yeah, do you typically trust their numbers? Do you, even though let's say everyone probably might say it's not going to be what it is,
Yeah.
do you typically just don't? Do you take the sim for what it is to go get to the questions first
Yeah.
before you do the work, or how do you think about that? Actually?
So on that point, like for the sim, and if you guys don't know what a sim is essentially like a PowerPoint presentation that owners and business bankers put together that outline the company, the opportunity, and like they're like selling themselves of like, hey, buy me because of X, Y, and Z. That's a sim. It's like a big book on a business or presentation on the business. For the financials there, I think for the financials in the sim, I think
Thanks for the question. He likes the questions. Thank you.
Richard. He's such a big fan of everyone besides me. It's like everyone I bring on stream, he's like a fan. I'm kidding. How many bedrooms you got in the Laguna Beach house? Hey, we got like six of them bedrooms in this thing. We got the water right there. We got the Lamborghini in the garage. No. Come on over, Tech Maestro. Okay, lock in. So I'd say for the sim financials, I take their historical financial table as is, right?
Yep.
Because I can't reverse engineer their historical numbers.
Yep.
Like I know nothing about the business. Like
Yep.
I can't reverse engineer their numbers. I can't say, oh, they had 1 million in 2023, 2 million in 2024, 5 million in 2025, right? That's completely wrong. They're gonna only have 2 million in 2025. Like the history is the history.
Yep.
Right? And I don't think a business owner will like flat out go and lie about all the historicals. I'll tell you what we're gonna do in the waiting phase and post. Well, I'll tell you what we're gonna do in post-LOI to make
Yep.
sure that all the numbers are correct.
Yep.
But as of now, you need to operate as if, chat. You guys gotta operate as if the business, their historical numbers are directionally accurate. They're not 100% accurate, but directionally on point of what they tangibly did.
Yep.
We will diligence that for fraud and check that later on. But as of now, we need to just take it as is. Now, what I don't take and what I don't use are their projections. I think management provided projections
Absolutely.
is mid. Banker provided projections, complete BS.
Yep.
Complete BS, right? They don't understand the company. They're not aligned to be reasonable. And their only objective is to sell that business at a super high price, and to get the highest price, they need to have the best projections. I've had friends work in banking and let me know that like they had reasonable projections for a sim and they brought it to their MD and they were like, this isn't good enough to sell this company. Increase revenue growth by boom, 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 boom. Right?
Kenny,
Things like that,
Kenny, I have a question for you. So you're
Mhm.
basically telling me when we get the sim,
There is no projections.
there's no projections, but more importantly, when we get the sim, just take it for what it is. That gives us enough information. There's no point to go in Excel to get information. Are you doing that?
Oh, like going into whoa. Okay,
Yeah,
so
that's
so that's different. So there's like a
Yeah.
difference between like there's work to be done,
Yep.
right? The work to be done in Excel, pre-LOI,
Yep.
is to do the analysis of based on the historic information, which I've accepted at fair value so
Yep.
far,
Yep.
paired with my own unique point of view around where the financial could go in the future. Not the bankers provider ones, not the consultant provider ones, the ones that I reasonably believe, based on the work that I've done. What is the price I'm willing to pay for this business based on the expected return that I could get based off of the fundamental, simple historicals that I have, and maybe keeping the average growth rate flat or assuming no growth, whatever that might be. It's all on a case by case basis for your assumptions. But like with that, what is the price that I'm willing to pay? And does this business, as is, paired with those assumptions, give me a solid enough return to own this? Now, that return can be a quantitative number on the exit side, right?
Mhm.
And for private equity, we like to do an LBO analysis. And an LBO analysis gives us, number one, does it like exit at a 20% IRR in like 5 years based on the historicals that they've done and my assumptions on the forward projections and the capital structure. Or
Mhm.
number two, if you're a long-term hold person like me, does it give me the levered free cash flow yield that I'm optimizing for, right? Because I'm not exiting. I'm holding this thing forever. So if I'm holding this thing forever, what is the cash flow potential of this business? And that's like the math that you would need to do it.
That's
So
super helpful.
yeah, that's how I would help. That's how I would do that. Like if I would look at a sim like that, guys, I would take the sim, and the first thing, like Tech Maestro mentioned, and is really spot on, before I dive into like the numbers and everything, like the first thing I would do from that sim is to identify, is this a good business? Right? I know I'm not repeating what I said on the Excel, but like actually ask yourself,
Yeah.
like, is this a good business? Right? Do people, like, should people be paying for this? You know? And will people want this more? Or like what could happen that could cause this experience of exchange of value to
Yeah.
drastically deteriorate?
Yeah.
Right? Like things that you don't want to postpone in diligence. Like things you don't want to postpone, tech disruption risk. Like don't wait until later on in the process, guys, to think, oh, what will happen if AI replaced them? Like, that's a fundamental first week question you need to ask when you first get the sim, or even when you're sourcing, right? Like, what is the tech disruption risk? The second thing is, what is like the company's defensible moat? Like, are they providing a good or service that is justified? And is it a reasonable thing that people should and ought to want to keep paying for? And what is the odds of someone that's bigger taking that experience away from me, or someone that's a startup with more capital disrupting me, or the potential for customers to try to do it themselves? Like those are fundamental commercial things that you want to understand pre-LOI, because it's like a fundamental business question. And
Yeah.
it's a pre-LOI thing because it's a fundamental business question that you can ask to every single business in that sector, right? It's not as if these are questions that are only applicable to this Florida opportunity. It is applicable to every business in this entire industry and ecosystem. So I want to get that type of questioning out the way there. Now, when I go to LOI and when I go to post LOI, I want to then start asking the questions that are only applicable to this business, because this business is the only company that can give me the intel and the data and the information as to like what's happening there. You guys get that? Like it's important to understand. I'm gonna repeat that again. When you're in the pre-LOI, when you're in the sourcing phase, you want to make sure that you are asking the fundamental diligence questions that are applicable to any business in that particular industry. The AI disruption risk question, that's applicable to the Florida business, that's applicable to the Miami business, that's applicable to the Texas company if they're all in the same home services space, right? But once we're post LOI, I can then start asking the nitty gritty questions as to, why does Florida business in Miami that does this home services, why is it that you have this particular customer concentration with this unique HOA? Like, why is that? And that's a question that I should be asking to them, and I can't ask to everyone else. Okay?
One more question, Ken.
Mm-hmm.
I want to know, do you, in this moment, typically when you deal with a business owner, when they put the EBITDA number or their adjusted EBITDA number, there's a lot of kind of junk in there that you tend to see maybe on the sim. Are you doing your own EBITDA adjustments on ad backs before you put the LOI down, or are you accepting what the sim says?
That's good. That's a good question. And Fino Patel also had a really good question. What are your thoughts on a roofing business with 500K of asking price and a gross revenue of 1.8 million? Ooh, and Kryptonite does not like roofing. That is 99% ex convicts as employees. That's crazy.
I think that might just be in Florida.
That's crazy. That's crazy. Hey, if y'all asking questions in the chat and you guys are not subscribed and you have not asked, like the first, press the freaking like button, I'm not answering. But Fina Patel, make sure you press the like button and subscribe. What are your thoughts, Bradford? Do you like that? A roofing business with 500K asking price and a gross revenue of 1.8 million? What's the cash flow?
For Neil, I think two questions I ask on that one. Is it residential or commercial? Commercial.
Ooh.
That's the first question I ask. The second question I ask is what geography is the business in?
Ooh. Jay Phillips, what up, top dog? How you doing, Jay Phillips? Good to see you. Sorry, guys. Bro, I'm in like my deep finance mode, so I'm cooking. So I'm not reading every single chat, but I'm here, though. I'm here. How the heck you doing, Jay Phillips? Myrtle Beach have back? Okay. What are your thoughts on commercial hood cleaning businesses?
That's a good business. The tough part about commercial hood cleaning businesses depends on the size of the business. Typically, these are like very fragmented small businesses with people running around in trucks doing work at night.
Yeah.
So you want to be mindful of that. But overall, it's a mandated use case. So those are, I mean, it's a good pain point. You just got to make sure you get the right size.
Yeah. So
yeah, but how do you think about the back?
So on the EBITDA add back question, right? There is an opportunity in the pre-LOI stage. Usually in a good process with a good banker, there is an opportunity in like the pre-LOI stage to get like simple, fundamentally clarifying questions answered. Okay, guys? What does that mean? That means that like if you see a business that has 20 different add backs, it could be owner's compensation, it could be one-off restructuring charges, it could be all kinds of things that bankers toss in. They add all these add backs to inflate the EBITDA number, because if they inflate the EBITDA number and they apply a multiple, they get a higher purchase price, right? A good fundamental thing to ask is like, what is the backup to each of these? Like what I would always do is if I have a table of one-off adjustments, I would ask the bankers and the management teams, what is the, like I would ask them like, what is, like, can you have management write me a 1-sentence summary around what this is, why it happened, and why is it one-off? You know, is that more comfortable? You can pull it like from the bottom over here. Yeah.
I'm done.
Yeah. Go ahead and pull it that way.
There it is.
There we go, chat.
I'm good. All right, here we go.
Right. Another good example is if you see a business and they give you a P&L, and it's usually like these like old school, super old bankers that don't have anything like Excel wise, like they'll have like a business that has like revenue and then it goes straight to EBITDA and it doesn't have anything on like gross margins, right? All of their costs are bucketed into like the exact same cost profile. Like a very simple clarifying question is like, hey, could you go back to the owner or the CFO and have them just give me a split between what is like true cost of goods sold and what is the operating expense? Because those are two drastically different things. Like if I'm looking at like a roofing business, there's two drastically different costs. There's the cost of goods sold of AKA the roofs, right? And I want to understand like how much of their input cost has been changing over time. But then there's also like a selling cost that's like the team in-house. That's like the sales team or the, I don't know, like project management or like coordination team. And I want to understand like how much of their cost is on the input side and then how much of it is actually on like the running the business back office side. Because I want to understand like how does this gross margin compare to other businesses in this industry? because we are still asking this question in this screening, sourcing, and pre-LOI stage of, is this a number one asset to own in this winning category? And if I have a business that has messy financials that I have not clarified yet, I don't have enough data to make the conviction that this is a best in class asset in this category, because I don't have enough data to accurately benchmark it. Like when you guys are looking at a business in an industry, the first thing you should do is like understand what the competitive set is in terms of like benchmark data. For all pool cleaning businesses in America, what's the average revenue growth rate? What is the average EBITDA or gross margins? What is the average EBITDA margins? What is the multiples that they trade at, aka comps? You can do that on a niche basis as well for Florida pool cleaning business. What is the revenue growth? What is the margin profile, etc. And then when you get a business that you've sourced and the bankers give you information and it's like all over the place, you ask them as many questions as you need to pre-LOI to say, clean this up for me. Give me these clarifying pieces of information so that I can benchmark this business accurately against my competitive benchmarking data set. So I can definitively say, this is a middle of the pack asset, this is a terrible asset, or this is a best in class asset based on what I've seen.
So Kenny, let me ask you this. So on the ad back use case, are you going to go back and forth with the banker before you put the LOI down on those ad backs? Or is that something that even though you asked that question, you're not going to go back and forth on? A better question, are you going to do the work yourself with the data that they give you to be able to calculate the ad backs while asking the banker that question and pushing if you have a different ad back number per se?
That's a good question, because that also leads to like,
Hey guys.
or do you not want to be in
Yeah,
camera?
no, put me on camera. Put me on camera. Yeah, put me on camera.
I keep trying to
That's the
show
whole point, trying to help.
Throughout this process, you get to diligence the financials of the business, the operational performance of the business, but then also you get to diligence the character of the management team, right? In this pre-LOI stage, we are everything that we've been talking about so far is just this. Is this a good business? And there's a financial component to it. We've also haven't even touched this. Is it a good team? Now, if they give us nothing but receipts, ugly P&L, unaudited, that then tells me in the team scorecard that their CFO is trash, the accountant sucks, and that they don't have a great job of tracking their numbers.
Yep.
So they're already a D- operator when it comes to their financials.
Yep.
Right? The second thing is that when I go back to the banker, I don't care if they're good or bad. Most of them are not that good. Right? But when I go back to the banker does the exact same thing of going to the owner and saying like, hey, they need this, and this. If the owner at the pre-LOI stage is being a pain in the butt to work with to get fundamentally clarifying pieces of information about their business, pre-LOI, it's going to be terrible post-LOI. When we ask them to give us access to their QuickBooks, when we ask them to give us their customer cube, when we ask them to give us the employee census, like it's gonna, if they can't give us a breakdown between their gross margins and EBITDA, chalked, you know? But mentally take notes of that, because like you're getting indication of their character, right? Case in point, the business gives me, information on a commercial roofing business in Florida, and it has no gross margin breakdown. It just goes from revenue all the way to EBITDA. It doesn't give me that much clarity. And I asked the bankers respectfully, can you give me a breakdown of the cost between gross profit and operating profit or EBITDA? I need that breakdown so I can understand the gross margin profile. And if the bankers let me know that the owner said that information is not available, red flag. Or if the owners are telling the bankers, why do they need that kind of information? I'm instantly asking, why is it a secret? What's in there? Because if people are reluctant to provide fundamentally clarifying information that is useful, then it's like they're hiding something, right? And oftentimes, like 99% of the time, businesses have skeletons. They could be great companies and they could be small skeletons, but usually they have skeletons that you're trying to unpack. But, fun with there. Sorry, before I go on a tangent.
Yeah. Last question on that, and then let's get to the waiting phase. But I'm curious, in that dynamic, if you are getting information and you notice something may be a little bit off,
Give me an example.
For example, they say, hey, you look at this business, they gave an ad back for family member number 2. And family member number 2, the ad back is a number that is kind of odd. It doesn't look like it's a kind of odd number, but that family member number 2, even post sale, that family member actually might stick around, maybe not.
Yeah.
Maybe something looks off. I don't want to get too into detail, but it's small.
Yeah, I know exactly what you mean.
Do you fight that, or do you just keep the ball rolling?
Yeah, I know exactly what you mean.
You know what I mean?
For Mr. AV's J7, thanks for the sub on YouTube. I appreciate you, legend. So ad backs, like example is like if I look at the business and they have ad backs that says owner's cousin salary being added back, but the ad back price is only $30,000 ad back or something like that, right?
Yep.
I would ask like a very fundamental question around what is the exact role that this person is playing?
Yep.
Right? Their ad back might be misclassified. Their ad back might be completely misjudged numerically.
Yep.
If that relative or that person was the exact person that had all the customer relationships, if that person had the entire sales function, or if that person was the only contractor going in and doing all of the jobs. Because if that person is not going along with the transaction, I then have to account for an absolute true cost profile of what it would take to replace that person.
Yep.
Right? So most of the ad backs are usually like team and salary related. So a very good follow-up question pre-LOI when you're like getting clarifying information on cost, on revenue trajectory is what is the specific role that this person is doing that has like what is the specific role that this company is doing and how integral is it to the business and how much does it reasonably cost to replace them with somebody unaffiliated with the company today at fair market compensation, right? Like that's what you have to kind of figure out because then you can kind of create your own OpEx assumptions around with the go forward team post close. Like the roster looks like this general manager, this head of sales, this lead contractor.
Yep.
There's a spider there. Hold on. Let me kill that. We got a spider in here, chat.
Yeah, I lost him.
No. This general manager, this contractor, this head of sales, this accountant. This is what it costs to have this entire team to run as is. Now you can have that be based on what does it look like to have this full stack with me in the business? And what does it look like to have this full stack of me like removed to where like I just get checks every month, right? Like you want to try to truly understand like the business is ran today by the owner, completely different how I'm going to run the business when I am a passive oriented like independent sponsor or a PE fund where we install a full management team.
Yep, totally.
Right.
Totally. I'm aligned.
So
keep going.
And so that's like, so those are like the two fundamental questions that we ask. Like, is this a good business? Is this a good team? And when you're asking if this is a good team, it's important to like get the posture of the business and the management team when you're asking for stuff or like on management meetings. And when you're having a conversation with management pre-LOI, like try your best to get a management meeting where you're like speaking one-on-one or with the bankers, just to like introduce yourself, have them introduce themselves, talk about the story of the company, and then give you like a little bit of like a background of like a recap of what happened with the company.
Totally.
And this is not like when you're having like 1 or 2 management meetings, this isn't where you go down every single line item in Excel and be like, what happened in 2024 networking capital or what happened in 2025, one-off sales growth. Like you want to ask fundamental questions, How does this business make money? What's been happening in the market? Or who do you compete with?
Yep.
And with who you compete with, what is your win rate historically against them? Why is the market slowing in this particular category? Things like that. Like you want to ask like fundamental things.
One
like
thing
that.
I will mention, pre-LOI, I think is really important.
Mhm.
Here's what the chat thinks here on this one. As you ask these questions, don't forget a very important thing too is building a good relationship
Oh,
with
yeah.
the owner. I think we should make that a key one.
Yeah.
Build a good relationship with the owner. I think something that's very important is there's going to be over dozens of people asking their own questions that are in their frontal lobe. And the biggest differentiator is how the owner feels with you. And the way they feel would be a function of them, you having empathy
Yeah.
for them as an owner, but also showing you have intentionality, like the questions that Kenny's telling you should ask. So I think that's a really important one too to add there.
How do you build a relationship with the owner?
Good question. I think so much of that is you asking the question going into it, and it seems like most people here are intuitive. What is the characteristic of a human who's an owner in this industry? Why do I ask that question? I think every type of industry has a different characteristic of the type of owner.
Mm-hmm.
If I am dealing with a pool cleaning business, that looks much different than when I'm dealing with the roofing business. It was actually funny. Roofing businesses, the owners tend to be a little more technical.
Really?
Yeah, they tend to be a little more technical, With pool cleaning businesses, transparently, the owners tend to be less technical, right? It's very important to understand that because it allows you to ask yourself, what is the best way I can approach this owner in a way to create trust, right? If an owner's more technical, if they look at me and I'm not technical, I need to have to probably substitute for that. If an owner's not technical and they look at me and they think I am technical, i.e. I'm a finance person or I'm coming in this type of way,
Yeah.
I might need to substitute for that. With that being said, I think one of the best ways to build a relationship with the owner is genuinely, empathetically asking the owner, help me understand tell me your vision for the business when you started the business and why are we here right now? And just listening.
I like that, man. I love that. Hey, someone said that they were new here. Who's it? Oh, Sebastian, you're here. Hey, Crazy Production. What up, twin? Good to see you, bro. Is Brad your roommate? I think we're roommates.
Now we are.
We're roommates.
Yeah.
That's my boy. All my friends are roommates, man. Question. How much does it cost to go to University of Michigan?
Ooh.
Probably like 50,000?
I think in states like $13K a year.
Okay.
I think out of states probably 40 to 50.
Okay. So, like let's assume 20.
Yeah.
You went to school for 4 years?
Yeah.
So $80,000. And then working in like venture capital, how much does it cost to like work at venture capital? Like they probably pay people at the junior level, like super junior out of school.
Ooh.
Probably like what, like $100,000 maybe?
I would say, junior level, I would say like 200.
Damn, $200,000? Okay.
Yeah, 200. Yeah.
Okay, so 80,000 for 200,000. And then how many years does someone need to work out there in venture capital to get some of the information that you get?
Oh, I would say on average, at the places I've worked, I'd probably say like 10 years.
10 years. So that's $2 million plus $80,000. So $2,080,000. So $2 million. $2,080,000. Is this US dollars?
I'm talking US dollars. Yeah.
Okay, US dollars. And you know your stuff, right?
Yeah, I do.
And if y'all haven't hit the damn like button of getting information that is worth $2 million and $80,000, leave. All right? I've done the math. The math, okay, is $2 million and 80 grand to get this type of insight, all right, intellectually into what makes a solid, good investment. All I ask for is two things. That you press the damn like button, okay? Richard knows how many people are watching and how many people are not pressing the damn like button. That's not fair. You pressing the like button is worth not as much as freaking $2 million. Okay, even though your time and your engagement is awesome. So thank you for that. And then number 2, I released a new video today, guys. Hey, I released a new video today, and it's actually kind of banger. And I walk through a complete day of my life of like real diligence, real sourcing, real hiring for portfolio companies, and it's a banger video. So if you have not watched it, leave the stream, go watch it now, comment, chat capital, and then freaking hit the like button. All right, it helps support the channel. But if you did watch it, let me know how you liked it, and let me know in the comments. Like, do you guys want more of that stuff? I kind of wanted to make it like a freaking like little bit of a vlog style. It's like a vlog light, right? It's like a baby vlog. I can make it like a real vlog, right? Because I have like travel coming up, a conference is coming up, management site visits. I'm gonna make that like really good, but I wanted to make our stuff more personable. So okay. Now, if you guys, we're not gonna say another word until you guys press the like button. So let me know when they press the like button, Richard. So, while that's happening, we're gonna play a little cafecito. We're gonna play a little cafecito. Let you guys get a little bit of time to press the freaking like button. You know what I'm saying? I'll give you guys a little bit, process your feelings and emotions. Because we're about to cook up. I don't know about you guys, but we're literally just 2 out of the 5 phases. We got a lot to freaking talk about. So I'll let you guys sit there and think about it if you want to press the like button or not. I'm down to continue. You're down to continue? I'm down to continue. What should they probably do? They should probably press the damn like button. They should probably press the damn like button. Okay, we'll be back in like 5 seconds. I'll let you.
Lo que siento es tan fuerte, imposible no elegirte. Ahora que estás aquí para poder existir, te elijo a ti, te lo voy a repetir, te elijo a ti, siempre voy a insistir, te elijo a ti, ya no quiero sufrir, te elijo a ti. Lo que siento es tan fuerte, imposible no elegirte, ahora que estás aquí. Lo que siento es tan fuerte, imposible no elegirte, ahora que estás aquí. Te quiero decir, te elijo a ti, si me dan a elegir, te elijo a ti para poder vivir.
Did they press the like button yet? Or what, Richard? I'm eager to get started, man. I'm eager to get started, bro. Oh, okay, fine.
We're getting ice cream for this.
I'm totally getting ice cream.
We're getting ice cream.
We're cooking. We're cooking.
We're getting ice cream after
We're
this.
freaking cooking. Okay, I like it. So,
Let's do it.
Pre-LOI. We were having a conversation right before we unpause it. And thank you for pressing the like button. I appreciate your generosity and your time, and I love that you guys are watching this and learning this. It's just so special. And hi, Mom. My mom watches the VODs, so make sure y'all respect. No, she's not home. She watches the VODs.
Okay.
Hey, Boogie, what up, dude? How you doing, Boogie? Hey, Garrett's here. What's up, man? Hey, the Shredlords are here. What's up, boys? All right, Imran, what up, man? Oh, dude, the dogs is here. The dogs is here. Okay, so we were having a conversation around like how crazy do you go on like the true EBITDA number pre-LOI, right? Because think about like how important that number is. Like that EBITDA number, and EBITDA is earnings before interest, tax, depreciation, amortization. That's like your like proxy for operating cash flow that you would apply a multiple on. And that EBITDA times that multiple is the TEV, or the enterprise value, aka purchase price. If the EBITDA is wrong and you're applying a multiple to it, you have a completely incorrect purchase price. That means you can either lose a lot of money, or you could set unrealistic expectations, or you're completely like gonna be uncompetitive in the process. So like how crazy do you get on that EBITDA number? And I was letting him know that it is not uncommon to outline in your LOI that I am looking to submit a purchase price of this purchase price, which equates to a multiple on this specific EBITDA that is referenced from your financials right here with a few adjustments subject to further diligence. That's why I'm saying it's mission critical that you at least have someone that knows what they're doing or a lawyer take a look at the stuff to protect you.
So
But
I
you
can say that.
you can say in your LOI, I'm willing to, like, if you guys were to like put an LOI using Luke's template, you guys could go out and actually say, I want to buy this pool cleaning business at a 5 times multiple on the $1 million stated EBITDA that you've outlined in your sim on page this, subject to further diligence. That's one way you can do it. The second way is you can actually provide a range. You can say, there's a lot more work to do, but I like your business and I'm willing to pay 5 to 7 times to own your business, subject to diligence. Right?
So it seems like that's probably just a wiser way to get past the process. You don't have to you don't have to be so persnickety in the process up front. You can say subject to further diligence or give them a range and make it a gentleman scout honor on the range in the LOI. Okay, nice.
The thing is, oftentimes, because it's a process usually.
Yeah.
And there's some dumb buyers and there's some really smart buyers. Some dumb buyers, they just put $10 million purchase price. That's it, right? They've done no work. They looked at the wrong comps. They haven't even looked at the sim. There's like, I went on this for $10 million. And then there's some that are super smart that understand that, like, I can't actually give you an honest answer unless I see all this data, but I'm not going to get that until post-LOI. So I'm probably going to do a range. That's what like some of the smart money does. And then you have a hybrid approach, like folks that like done a bunch of freaking diligence and work to understand what is the like reasonable EBITDA and what's the reasonable multiple. So they have like a more pointed number, but there's only one owner that is evaluating all these. And the owner either cares about people that just have that darn price.
Yep.
Or that can have a range that's in the kind of like, you know, area that you're particularly interested in.
Yep.
You know, a cool collection or a cool collector. Sorry, my bad. Thank you for stopping on YouTube. Melly, how old are you? I was just watching the parking lot video. I just turned 17.
Ha.
I'm just kidding. I wish. I'm old. But take a guess. Does that make sense though? Like you can do a range, you can do a target number, you can like all kinds of things. The key is like it's a delicate balance because you want to have something that'll just get you through.
Yeah.
And usually sometimes in like a bigger deal, like if you guys are targeting like lower middle market deals, or if you're targeting like upper middle market deals, you might be having to participate in rounds. Like oftentimes, like there's not like a LOI phase. There's a round, there's a round 1, then there's a round 2, and then there's like a final LOI. Round 1 is kind of like, all right, you guys have seen a teaser. Who's interested? Round 2, everyone that's past round 1, who has access to the sim now, what's their multiple or purchase price areas? And then the final LOI, that's kind of like, who are we going to invite into like, you know, exclusivity, things like that.
Right. So let's do a quick recap and let's get out of here. Let's get to the next phase. But so it seems like the first thing here is just we have to make sure it's a good business. Is this a business that has some defensibility?
Yeah.
Do we believe this business has strong unit economics?
Yeah.
Do we believe that this business has the right to continue to, actually, we won't even get to that point yet, but the right to continue to grow?
Yeah.
Right. And do we believe with the financials that we have, we're able to paint a good picture for this being a business that has a healthy path moving forward. Challenge any of my points there, but seems like that's on the good business part. Any questions there before we go to the good team, good growing market other side? It seems like we have two good businesses right there. So looking at the pre-LOI part.
Yeah. So a good business, a good team, a growing market, business I understand.
Yep. Business I understand. Yep. Okay. Business I understand.
Business I understand. That's over. That's like underlooked at, right?
Yeah.
And people underestimate that.
How's this business make money?
Yeah. Like, do I understand what they're doing? Right?
Yeah.
Like, you have to keep in mind, it's only going to get more complex. Like, it's only gonna get harder. Yeah. So, like, you should, like, Buffett has this thing where he talks about circular competence.
Yep.
Like him and Munger, like to invest in areas that are like their circle of competence.
Yep.
Like his circle of competence was in every industry, in every geography, in every single world, in every
Yep.
single niche. He had a
Yep.
handful that like he knew very well, to where he could expedite this entire diligence process up to speed. Because here's the thing, all this stuff is competitive, right? You're not the only buyer of a company usually, or bidder for a company. And you do not want to be a bidder in a process where you know the least about the company and the industry, and you're bidding against people that know the most. If you are bidding against someone that only specializes in pool cleaning distribution assets, and you're fresh from college trying to buy a business and you just saw the sim and you're trying to get up to speed, the questions you're going to be asking management are down here. Very simple, right? What products do you use? The questions that the industrial niche person is going to be asking, they're going to be asking so many crazy niche things on unit economics, on specific competitors, on specific disruption risk, on specific CRM tools or project management tools they're supposed to be using, little things like that, to where the owner's going to be like, oh, this person kind of gets it. Like they just understand it really well. And they probably are going to be solid stewards of my legacy and my business because they speak my language. And I think this is part of what you mentioned around building a good relationship with the owner. Part of like the preamble to building a relationship with the owner is to just like do the damn work to understand what this business and industry is.
Yeah. One question I always love to ask a founder and an owner of a business, a founder and a CEO of a business. Excuse me, can you please break this business down to me like I'm your grandmother? And forgive me if I'm being presumptuous. Maybe I can break down the business quite nicely, but I actually want to take a step back and be presumptuous, acting like I know nothing about your business. Can you please break it down to me like I'm your grandmother? And the reason why, what's interesting, I noticed from founders and owners, a lot of founders and owners don't know much about their own business. And it's really interesting. It's a very interesting dynamic.
Wait, what?
Yeah, a lot of founders, very interesting dynamic. A lot of founders, owners, there are questions some things they wouldn't even know about their business. And I've noticed that in some conversations I've had with founders and owners, when you ask them some of the elementary questions, there are some things they say I have to get back to you on. I got to figure that out. So again, I only
would you invest if they don't know a lot of those fundamental questions? Would you give them grace?
Depends on the demographic of the owner. If the owner is an older owner and the questions that I asked, they're sitting on top of the business more than in the business, that's okay. If these are fundamental questions about how the business is, like the drivers of the business, that's a concern to me. In the weed, in the business questions, that's okay, because that owner's probably not dealing with that on the day-to-day basis.
Yeah.
Right? Drivers, if you can't answer
why does
your margins,
yeah.
Like what drives margins? Why does market grows? That's kind of a question. That's a question mark. You've been doing this for 10 to 15 years. You don't know the answer to that?
Yeah.
That's a question mark. But
we just make money. I don't know how. I've heard that before. Where owners are just like, it just works. It just works. And I'm like, great, Sam. It's going to freaking just work for you until the shit doesn't work for me. Okay?
Let's get to the next one. I'm curious to the next
Thank you, Melly, so much for the subscription. I appreciate that. Thank you. And my guess is 27. You're actually close. All right. So the waiting phase. Is it true that short sellers mess up the system? Now, Sebastian, how is that relevant to the discussion we're having right now? We ain't talking about no public markets and no short sellers. Oh, is that a question for the chat? For them, not me. Oh. All right. Anyway, so pre-LOI phase, and then you submit the offer. And then while you submit the offer, you're like waiting and you're in limbo, right? They haven't gotten back to you yet. You're following up with the bankers. They're like, oh, they're taking their time. What actually is happening most of the time is if you're in the waiting phase, that means the owner is evaluating other offers, or the owner is vetting you to see if you're like a fit. They're like stalking you. They're looking at your LinkedIn. They're like dwelling with it. They're having conversations with their wives or their husbands to see like, oh, do we really want to sell to this person? Little things like that. Because while it might be not as significant to you guys to submit an LOI, you might be dishing these things out like hotcakes. To an owner, to receive an offer letter, whether it's binding or non-binding, on a business that they spent like 30, 40, 50, 70 years on, that's a very, very, very like emotional development. Like, OMG, like my business is actually worth this. I could actually sell to like this particular person, you know? Like that is something that you have to just like think through. And oh, Sebastian 100%. He said I can bench more than Bradford for sure. Totally. So that's what we think about the LOI. So like in the waiting phase, the objective in the waiting phase is, I say, number one, outline your real diligence needs. Right? The key is, like, for these real diligence needs, what this is essentially, once the owner gives me the green light, what is everything I need to know to own this business? You know, like what is everything I need to know to own this business? And something that's like important to understand is like, you want to get as nitty gritty as possible. You want to dive into the operational stuff. You want to dive into the financial stuff. You want to dive into the human capital stuff. You want to dive into the competitive stuff, the go-to-market functions, everything. Meaning like, what is my entire diligence tracker? Like while you're waiting, it doesn't cost you that much to have Claude or Gemini act and prompt as if they're a operational due diligence consultant that is going to be engaged in a 3-week period with a management team. What is everything they would need to know? And do that across operational diligence, do that across financial diligence, do that across team, market, commercial, all that, and then just put it in a consolidated list.
Can we write that down?
Oh, okay.
Yeah, I think that'd be super helpful.
In the waiting phase. Oh, like the diligence streams?
Yeah, the diligence.
Okay, outline the
streams.
key diligence needs.
Yeah, I think that'd be super helpful. And I don't know who's on this right now, but this is $1 million worth of game right here.
Mm-hmm. Take Maestro said it was only 500. Wait, take Maestro, you actually wait, what is it? This course could easily be $500. Only $500? I ain't trying to look. Only 500. Boogie, what do you think this is worth? Let's see, operational, financial, commercial, and this is like market, competitors, TAM, customers, right?
Yep.
Then you have legal. Then you have, so the financials, this is like Q of E. And the Q of E is just like doing like diving into, like Q of E, guys, this is so important. This is like diving into raw bank statements, receipts, and having a Q of E provider go in and piece together and look through every single thing and all the bank statements to say that this business, based on what they actually receive in cash every single month and what is actually related to the business, none of the personal stuff. This is what the business's true EBITDA or cash generation potential is, right? Simple enough. So Q of E, proof of cash, net working capital analysis. And this net working capital analysis is important because, like, I think someone asked it in the chat, like, this net working capital analysis is important because you want to understand, when I own the business, how and when does cash come in? And then how and when do I need to pay either suppliers, employees, or contractors? So what is the difference between me paying someone to do a job and then that waiting period and then me receiving the money on that job that was complete? Because you could pay a subcontractor for an engineering project in April, but that job does not get paid until June. So you need to ask yourself, like, how much of this happens and how am I able to like fund that working capital need for a business? You know,
That's the NWC analysis.
net working capital analysis.
Net working capital.
Yep.
Who's let's keep going. I get back to that. I think after we have all these written out,
Yeah.
I think the question for the chat that people should know is like, who's actually helping you do this? How much of this is just you doing this versus other people helping you?
Yeah.
Do I
Ooh,
do
that's
all
good.
this by myself?
That's good.
Am I a lawyer?
Ooh, that's good. That's good. Red flags, background checks. So red flags, background checks, contract reviews. And guys, I would say, were you in SEO?
Yeah.
Yeah, he was SEO, also SEO. Kenny better than my professors from my purple school? I told you, ain't nobody in the game doing it like us. Shit. Okay. Operational, financial, commercial, legal. Then it's like your preliminary value creation plan, right?
Yeah.
Right. What do you want to do to grow, improve biz? Right.
Yeah.
Okay, that this operational needs to improve. So you want to understand the employees, you understand the tech, the tools, you want to understand like the office location, you want to understand like how they operate. So like
Yep.
so the best way to describe it is a full what happens every day
Yeah.
over 5 days. Right? Like what is every single person in the office doing every single day at every hour of the day? Right. Like if you like the greatest form of diligence is if the owner says, "Hey, come hang out with us for 7 days," and you get to shadow all the employees for 7 days straight, and you just like shadow them. You watch them do everything. You know. That's what I would do. That's what I would do is like try to understand what is the like how does this business work?
One thing I would say is, and this is
Yeah.
really important. There's a really great acquirer named Brad Jacobs. He's one
Ooh.
of the best to do this business. People should look him up. He has a
Oh, this guy?
yeah, he's incredible. Just look at look at how he looks. He's losing a little hair, but his brain is there.
Look at the teeth though.
Hey, great teeth.
Great teeth.
Great teeth. His name's also my name, so I like that. But one thing he mentions, and I think this is really important for the diligence part, is on the team, he says when he goes in, there's gonna again on the checklist, but post diligence, you should walk with most key members of the team and ask them, if you had money, would you buy this business?
Ooh. That's key employees. If you
Ask key employees, if you had money, would you buy this business?
that's fine. That deserves a like button. You know, some people watch this stuff and don't press the like button. They just watch and they extract value and they're like silent ninjas in here, just sneaking.
I
Sneaking
think
value.
Isn't
that
that's
crazy?
I think that's probably the most important thing. I would probably put that under team or something.
Yeah.
But making that's a very important question.
Yeah.
Yep.
Should we put this in the Discord for people?
Yeah, absolutely. Yeah, we should add as much value as possible for the people.
All right.
Let's keep going.
Okay. So post-LOI. Post-LOI. Oh, by the way, Discord link will not be added to the YouTube chat today, unfortunately, because I checked again this morning and we had a bot. We had to send somebody to the gulag this morning that was in the Discord, spamming some crazy stuff in the different channels. And as you guys know, as we grow, I love the community. I love what we're doing on the streams. It's so epic. It's amazing. But the last thing I want is to inundate people with the worst of like spams or disrespect or harassment or like fraud or weird links and stuff. So we had something like that in the chat, and I just is not. That's not how I operate. So I got to get some mods and everything, but that guy's banned. And
who's Josie JEF?
No way. Are you serious? Josie! What the heck? What? Hi, Josie. Oh my goodness, it's a family affair. You taking notes? Shall we learn it from you? We learned it from you. All right, lock back in. Y'all get me so distracted. Y'all, we gotta lock back in. Okay. No, Sebastian. No. And whoever says anything Sebastian, the second you see a female's name in the chat, oh, Latina, boy, lock in, okay? Take some dang notes, all right? And no one says anything bad about Josie. Josie is an angel to the entire community. The second we see anything that is somewhat not even of great praise, you get banned for life. For life. There is no second chances, okay? You treat Josie literally like Queen Elizabeth. All right, moving on. So, post-LOI. Alan says, I'm not allowed to. Okay, so post-LOI is, oh yeah, she is a shred lord. Josie is a shred lord, low-key. She's one of us. She's a shred lord. Okay, so post-LOI. All right, so we've done a lot of work. So this right here, guys, this right here is you're outlining what it is you want to accomplish. You're not doing the work. You're kind of just like, you're building a template, right? You're building like a list of like what I theoretically want to do, so that when you have a conversation with the owner and they accept your offer, that same day you can say, great, thanks for accepting the offer. As I mentioned in the LOI, all this is subject to diligence. And over the next 6 weeks, I want to promise you that we close on time. Over the next 6 weeks, I want to dive into operational diligence, financial diligence, commercial, legal, and value creation plan. And what I will need from you, Mr. or Mrs. Owner, is I need access to these people. I need access to these files. I need access to these customers in order for me to do my job of diligence. And I also need to spend 1 week with you shadowing the team. You outline to them the entire step and process of what it will take, right? You outline them the entire step and process of what it would take. Next, on this waiting phase, number 2, you keep it pushing, right? You keep it pushing. Why? There will always be another deal. There will always be another deal, and you do not want to waste weeks hoping and waiting for an owner to get back to you and say, yeah, we like your offer, or no. And the next thing you know, if they say no, you've missed out on 3 weeks of sourcing, right? So of course, take like 1 day, crank out this incredible diligence prep list. But then outside of that, you're back to the drawing board as if nothing ever happened.
So I'm assuming, Kenny, we can just keep this as a template.
Yeah.
Okay, so
we can build over this over time. Yeah.
Okay, cool, nice.
It's very. Oh, I used to have like a really clean, organized template and stuff. I can send you that, but this is just to give
love it
from scratch, because I don't want to come on stream and show you guys something that's like made. I want to like freestyle this whole thing and show you like actually what it takes.
Great freestyle.
Right? It's like freestyle.
Yep.
We're like finance rappers.
Yeah, absolutely.
You know, we're like finance rappers.
Absolutely.
Okay. Or finance musicians. I don't want them thinking just because we black, we rappers. Finance. Finance musicians. I'm universal.
I never
rhyme. Mr. Worldwide.
I never had the time to rhyme.
Mr. Worldwide. Hey, I listened to Paramore earlier today, Chad. I listened to everything. All right. Post-LOI. Post-LOI, this is when you actually, and we're assuming that this post-LOI is like they've accepted your offer. Yeah. And now it's like one-on-one diligence. There's no one else in the process. They said exclusivity, like, let's roll. Okay?
Yep.
So post-LOI, this is where you hire the team. Right? This is where you hire the team. Post-LOI, this is where you scrutinize the numbers to the finest of details. And then also, number 3, I'd say prep the, okay, hold on, I gotta write this before I forget. Okay, so hire the team, scrutinize the number, prep the legal stuff, and then also outline or like refine the growth story, you know? And then at the same time, it's like coordinate financing, right? Because like if you guys are doing SBA, you got to start looping in the SBA at this point, right? Like you want to start looping in SBA at this point because they take a very long time. Like any bank is going to need the time to like go through a process. So you want to make sure that at the point of you going to the bank and saying, I have a deal that I might want to work on, I need money for it. You don't want to loop them in when you're like purchase agreement is signed and all the work is done. Like you want to loop them in as early as you can to say, I have this business that has this EBITDA number. Here's my Q of E report. And with this number, are you willing to finance me if we close this deal? That allows for them to go through their preliminary hoops and committees to say, hey, this is an industry that we have appetite for, or hey, this is a business model and financial stats that I think is worth lending to. This is going to be all the different stuff that I'm going to need from you, so that while you are bugging the owners and the management team guys with all of this stuff here and this operational diligence needs, you can also add on the preliminary financing questions that they're going to also need, so that you hit the management all at once with everything.
Kenny, can I ask you a question? 'Cause
Yeah.
I think you're doing a great job on this. I'm curious though. So once they sign the LOI, are we still doing the commercial diligence, the operational diligence, the financial, right? Are we still doing that? Like that we start that after they sign the LOI. Am I correct?
Yeah.
Right. So all of the waiting phase of what we prepped, we're now doing those things post LOI, including the new 5 things you outlined. Am I thinking about that correctly?
Yeah.
Okay, gotcha.
Yeah. So when I say this, like post LOI, so they've accepted the offer. So
Yep.
who am I hiring? I'm hiring the Q of E provider.
Got it. Okay, got it. Super clear.
Right.
Super clear.
I'm hiring the lawyer.
Yep.
I'm hiring the operational DD person, the one that like walks the factory and knows everything about every machine. And they're like, oh, actually, that machine is like 70 years old. You got to replace that.
You hire somebody like that?
Bigger deals do.
Okay,
Right?
got it.
When you're like middle market private equity and like mega fund, you do. When
Yeah.
you're lower middle market, you should like know what everything is,
Yep.
or you should like find someone on LinkedIn and like hit them up and FaceTime and be like, hey, what does this mean? Right? Right? Like you don't want to walk around in a factory when you're doing your week with them and look at equipment or look at like a whiteboard that outlines their business and plan and everything and not know what's going on.
Right.
You know?
Right,
So
right.
like people hire like operational due diligence providers. You know?
Gotcha.
So that's why it's good to like if you know people that have ran businesses in that space before, it's good to have them on speed dial or just on retainer to be like, hey, when I go visit this, can you please come with me?
Right.
Or when I'm like
right.
at this office, can I FaceTime you and just show you the stuff and you can give me
Right.
your thoughts? Because they will know what they're seeing,
Right.
and they will also know the nuanced specific questions that they need to answer.
And what if I, just in case, just for the chat, given people's circumstances, what if I just don't have the network or I don't have the resources to be able to hire operational DD?
That's such a good question.
Am I scrappy with it? Like, what am I doing? Like,
Yeah.
what does that look like, Kenny?
Yeah. So what I would do, I'll pull out my phone. I'll go to Claude, right? And I would do the camera on Claude, and I'll take a picture of that facility, or
Yeah.
I'll take a picture of the like main equipment. I would ask the
Yeah.
owner, what's the number one piece of equipment here? What's your moneymaker? What's the most important piece of equipment here?
Yeah.
I'll take a picture of that, and I'll be
Yeah.
like, Claude, act as if you are a experienced operational diligence provider at a top consulting firm.
Yeah.
Focus on this niche of businesses, and you understand this industry. What is this machine? What is it used for?
Yeah.
Is this in good shape?
Yeah.
How much does it cost to replace this?
Yeah.
What is the expected and average utility,
Yeah.
uptime and downtime?
Yeah.
And help me benchmark a best-in-class operational KPI stats for this particular machine.
I think what I think we need to do. I think what, just off of what you said that got me so exciting. I think this whole group needs to hear another episode of how you can prompt Claude to do these things.
They don't even hit the like button. I'm not giving that away.
You don't want to give it away?
Bro, just press the damn like button. I'm kidding. But that makes sense, though, right?
Makes a ton of sense.
Because
Makes a ton of sense.
Claude has the intelligence
Yeah.
of the world's greatest combined operational diligence providers.
Yep.
You just got to know how to
So
prompt
we
it
have,
correctly.
he's not to prompt it. Yep, totally. Keep going.
Right.
Keep going. It's super helpful.
Okay. Hey, hi, Dama. All right. So, post-LOI, I'm hiring the people. I'm letting them know, like, hey, this is the deal I'm looking at. They sign joint understood NDA. They then get looped into the process. For the QE provider, they're going to ask you to ask the company and the owner for all of the bank statements, for all for the QuickBooks access and all those things. And then they're going to just crank and do all their work and come up with a number of what the real EBITDA is. That's the first thing you should do. The first one you hire is going to be the QV provider. And you can use my guy if you guys have a deal, right? And my guy is like a really awesome person. He sponsored one of our videos before, but I used him for the deal I'm closing. And there's like a bunch of QV providers, but don't think you can use AI and don't think you can use, your own knowledge to do a QV. Like if anyone is closing a deal, hire a QV person. I don't care how much it costs. I think it's like 5,000 to 10,000 is the most important thing you have to hire.
Absolutely.
Because that gives you like the accurate number of how much cash this business generates. Like that's the most accurate number. All right. So then once you have that, you then scrutinize the numbers, and the QV provider will give you so much indication and like ideas around what they need to diligence and ask. Because the QV provider is going to be like, hey, there's something really odd going on every November in this business. You should probably include that in your next management meeting with your with the management team, right? Because I'm not gonna be sitting at all the receipts, and from all the receipts put together the outcome that like every November there's this one customer that like doesn't pay us.
Right.
But the QV provider that does the QV, like they look at every single receipt, they look at every single bank statement, and they will see those kind of trends. And they'll point that out, and like we include that as like a key diligence item for the management of like, hey, we need to figure this out right now. So you scrutinize the numbers, and then you prep the legal stuff, and then this refining the growth story. This is important because like this refining the growth story is just articulating like with everything that you're learning. At the end of the day, like during the day of closing deals, every single day you are going to be looking at so much stuff for that business, learning so much in diligence. But at the end of that day, you need to take a step back, bigger picture, go to the beach and have your journal and say, based on what I learned today, how does this inform my view of the future of this company?
Yep.
Bigger picture, like based on everything I've learned so far, just today, how does this help inform my growth story for the next handful of years of my ownership of this business? Just slowly refine that growth story and just journal. And the next thing you know it, over a 6-week period, you've got so much context around what you feel has changed and evolved in that growth story, because that will inform your forecast for the business. And that forecast is the complete only driver of your returns, of how much money you're going to make from this, whether the cash flow you're going to generate or the margins you get or the exit you get. And then coordinating financing. You want to coordinate financing just by bucketing all of their annoying questions and requests in with all of your annoying requests, so that there's one full super long Excel sheet of like 10,000 things that you're asking for, but half of them are yours and half of them is from the bank. You just want to make sure that like you just hit them all at one time, because you don't want to have the team because like when you're selling a business and you're going through a process and you're post-LOI, you have to use your personal time as the owner and your team's time to prepare and gather all of this stuff. And when you're doing that, you're not generating revenue because you're not like focused on actual customers and work. So be very, very respectful of their time and hit them all at once with all this crazy stuff you got to ask for, because you're going to have to ask for it. And don't feel shy about asking. You have to. You have to do right by you by asking this stuff. But if you're going to do it, like do it all at once.
I have a question. I have a really important question, Kenny. I'm super curious to understand how you think about this, and also want to be mindful of time because I know ice cream is going to close one day. What if you have an owner who is extremely old? And what if that owner who's extremely old is really struggling to be with you with some of these questions that you're asking the owner?
Very good question.
Like how do you manage that? What are you doing?
What I would do, I would get a group of guys, 2 to 3 guys or gals that I just trust, absolute hitters. Me, QV dog, and a lawyer. We fly out to the owner, and we're like, give us 2 days.
Yeah.
Access to everything.
Yeah.
We won't bother you. Give us a little office space here. Give us one desk.
Yep.
A login.
Yep.
Give us 2 days, and you just go ham, getting everything you need, right? And you tell the owner, I'm willing to, after these 2 to 3 days, give you my entire assessment of what I think is great about your business and what is bad about your business and what I think you could do to improve your business. So while you generously gave me access, I will respect that privacy, and I will also give you a gift of my thesis after these 2 days, so that if we do a deal or not, here you go. Here's how to 10x the company, of which I was going to do. And here's also the skeletons that I think you should probably spend some time looking at. That's like the
Super
worst case
helpful.
scenario,
Super
is that you
helpful.
do all this, you find stuff you don't like, or the owner's pissed. That's their gift. It's like, I've done all this work. There you go.
Love it.
The great case is they giving you access. You're 2 or 3 guys. You went crazy on the analysis and diligence, and you've knocked out everything from an analysis perspective, from a diligence, from operational, from commercial, from legal. You looked at all the contracts. You articulate your value creation plan, and you're done. 2 to 3 days, and you're done. Right? And you're 2 or 3 guys or gals. You go to dinner after that. You have a conversation. You're like, so do we like it? Let's roll. Boom.
Got it.
Right? And
Got
you're like, look, owner, give us literally the janitor's room. We just need access to the files. Just give us the janitor room. We will be out of your way. And you guys just go ham. Like ham. You know?
Yep.
So that's that. And then moving on to the pre-purchase agreement,
Let's
guys.
do it.
So moving on to the pre-purchase agreement. Here, this is when you've had a solid point of view on price. This is when you've had a alignment on financing strategy, and you have all the data requests and everything's kind of like pushing. And now like you're trying to truly understand the price I'm willing to pay for this business, like truly the growth story. And then what's going to happen as soon as I'm owning this. And I think there's 2 key things you want to do. I like to do this. I like to do a 13-week cash flow model, right? Because now I have the clearest picture of how money comes in and money goes out. Like I understand to a very nuanced level the flow of cash of this particular business, right? Like I understand how much they generate every single day and how much they pay their employees, subcontractors, and costs every single day. Is a pre-purchase agreement non-binding? I would say a LOI is non-binding. I would say like a final LOI is also non-binding. I would say a purchase agreement, like a stock purchase agreement or an asset purchase agreement, that is binding.
Whoever Josie is, she must be really smart. Great question.
They're asking some incredible questions.
Great question.
Jeez, elite questions. Elite questions. Y'all getting some good stuff here. But I like to build a 13-week cash flow model to understand every single week how much cash comes in and how much cash goes out. And that weekly model, one of those columns shows like the first where we can see all the rent coming out. We see paychecks going out. Every single week we see like the salaries, or every 2 weeks we see the salaries. And then we see like the big subscriptions that are due, right? Because we have access to everything now. We see all the receipts. So we know like when their subscription is due on certain dates. We see when their subcontractors are paid on certain times on Fridays. We see all this different stuff. We see the payroll. We see all that. We understand like based on the amortization schedule from the SBA or the lender when they would want to see their monthly interest and payment of principal. And then we can like incorporate that to understand, all right, based on everything that happens historically and all my forecasts over the next 13 weeks, assuming we close on XYZ date, this business will generate X amount weekly. And this incorporates all your perspective on the cyclicality of a business. And you will see in a down, low job season, right? Like hurricane season or in the winter, that this business doesn't generate that much revenue. But you have all these costs, but then you also have the financing costs. Like you're stuck in like a cash burn season for like these 2 or 3 weeks, but you make up for it in weeks 3, 4, 5, 6, things like that. Like I get a really clear articulation of what is going to specifically happen with cash over a 13-week period. I like to do that. The second thing is pre-purchase agreement is I understand team needs. Like I've understood very clearly the gaps in leadership, who I need to hire, and how much they cost. And then while that's also happening, like the lawyers are doing the lawyering. they're just like yapping and like negotiating and all this stuff, right? And then financing is going through committee. Because what you guys have to understand is like a bank or a private lender, they're not just like people that write you a check. They have levels of approval to then give you money. Like a bank or a private lender or a family office, they need to take your opportunity, ask a bunch of questions to get clarity, and then once they have all their answers, prepare a memo to then submit it to their committee, and their committee then has questions, and they need the back and forth, and then they finally gets approved, and then once it's approved, then they're like, all right, good, here's the rate or loan or product and all that stuff, you know? So financing going through all that.
One question for you, Kenny, on this one, just for the chat.
Mhm.
Are you creating a memo for the bankers?
I'm providing the lenders with my annual forecast for the business.
Yep.
I'm providing them with, hey, Gabriel, what up, Todd Dog? Thanks for the sub. I'm providing them with my annual forecast. I'm providing them with like my my memo of what I think the business can produce or do.
Yeah.
Right. It's like SBA asked for like, it's not like a memo. It's kind of like a written growth story or like strategy around why I'm relevant to own that company. And also what my plan is they call it a business plan of like what I plan to do with the company.
Got it.
You know?
Yep. Keep going.
So that's what they asked for.
Yep.
But they do all the work there. Pre-purchase agreement. And then once the purchase agreement is like signed, then it's kind of like all lawyering at that point, you know? So like post number 5 is like all the lawyers going like absolutely nuts. And
Good.
yeah, you're kind of like good.
And then on the 13-week cash flow model, just for everyone to know real quick, as you're going about that, are you doing this? What are you really looking for? What's like the key thing? I get what you spoke on regarding what you spoke on regarding understanding how the money moves in different seasons of the business and circumstances.
Yeah.
Are you using this also when it comes to understanding the value of SDE? Or are you using this to understand the value of unlevered free cash flow? Or is this just more for your own operational, far-sighted perspective of the business?
Repeat that first part again.
Are you looking at the 13-week cash flow?
Oh, 13-week cash flow. Oh, so
Yeah.
the 13-week cash flow, that's for me to understand where I will run into a liquidity crunch.
And this is
Post-ownership.
just operational. use
Operational.
cases. Okay. Cool.
Operational.
Yep.
Like I know that when I was doing the work, that this business makes $1 million of cash flow annually.
Yeah.
Less the debt, I'm probably gonna come out with $400,000
Yep.
of cash flow.
Yep.
What truly is important is like for that $400,000 of cash flow, does it all come in fourth quarter?
Yeah.
Or like, is it like split over? Or like for the first 13 weeks, am I like cash burn for the first month? But then after that, I make some cash? Because that 13-week cash flow model is really tied to the net working capital. Like that 13-week cash flow model, what you're really articulating is number one, when does cash go out of the business to pay for work to be done? And then how long do you wait for the work that was completed to then get a receipt or to then get like a cash receipt of that payment from your customer? Like what is that gap, right? And you want to like stagger and stack those gaps across customers so that like you have a smooth cash flow profile.
Perfect.
You know?
Yep.
Can you talk about mitigating risk found in step 5? How and where to make trade-offs or profiles, like risk. So risk found in step 1 is if I find out that like in the 13-week model, for the first 10 weeks, we burn nothing but money, and the last 3 weeks, we finally get cash. A mitigation to that is to, for the 13-week cash flow, you're losing a lot of money. A mitigation to that is to include that in your SBA or your bank. Like you need to articulate to the bank and be honest with them and say like, hey, we need the financing to purchase this company, but we also need a working capital facility to help us cover the first 10 weeks of the business, right? And they usually will be open to providing that. So that's mitigating that there. The other thing too is you can negotiate with the owner to say, I would like for you to leave X amount of cash in the business. We'll reflect that in the purchase price and all that, but I want you to leave X amount of cash in the company's bank account so that post-close, I can pay the bills and keep the lights on immediately post-close. Now, the second thing, understanding the team needs. If a risk is that the team needs are drastically more than what you anticipated, meaning that like the COO is really, really bad, or the head of sales has a drinking problem, or all this other stuff, because you get like really intimate with these team members. Like you start to really understand them. If you understand all that stuff's like really bad, if it's like detrimental,
Someone has a legal record.
legal
Going
record,
to
yeah,
jail.
yeah,
That's
little things
honest.
like that. Like
That's
you
honest.
go to the owners and you say like, hey, I found this. I need you to like reflect this in the purchase price. Like I didn't know about this when we first met. Like this is really bad.
Yep.
Multiples change, right? Lawyers doing their lawyering. There's not much to go around there.
Actually, I have one comment on that one. I think
Yeah.
that actually for the group is one of the big hidden challenges. Lawyers, and I don't know what you've experienced as you've looked at deals, but lawyers will give you every reason why you should not do something.
Yeah.
And there is a real flex in mitigation of managing the lawyer being optimistic while them not continuing to give you their skepticism of why not to do something and just killing your deal and killing your money.
Yeah.
So that's one big risk mitigation, I would say,
Yeah.
is keep a very strong balance of what's fair versus what's not fair with the lawyers, because they will continue to push you away from actually doing the deal, just
Yeah.
for people who are actually acquiring.
You want to see a 13-week cash flow model?
Yeah, let me see.
I'll show you one. You guys want to see one? It's going to be in the Discord. If you guys want to see it, you got to get into Discord. Here's like a 13-week cash flow model. Right? So like every single week, I zeroed out revenue for the first 3 weeks because I know revenue only comes in when work is done. Right? But work being done, there's like a 1 month lag until we actually get paid for that work. But at close, I'm not entitled to the revenue on the work that he already completed. So I only entitled to the revenue based off of post-close, the work that I'm sending the team out now to go start doing, right? So there's that, but I still have to pay the costs associated with them going out to do the work. And then here's all the expenses. And then here's like the rent that I need to pay, right? Monthly rent, utilities. Here's revenue or cost per team member, little things like this. And then here's like my cash flow number. And then here's like when the debt is paid.
Yeah.
So like this particular week, I got to pay the principal and this is the interest on it over time. Boom, boom. And as you can see, like for the first few weeks, cumulative cash burn.
Yeah.
Right? Cumulative cash burn until, you know, it hits a certain like point. You know?
That's super
but
clear.
You have to have like a working capital line to be able to afford all that, but then you're crushing it.
Yep. Man, this was awesome.
You know?
We did this.
Hey, chat, look at this. We freestyled this, dudes.
We did it.
We freestyled this, dogs.
We did it.
Sure. WWW. I don't know who else is out here doing it like this.
I think you're gonna need to share this with me. That's insane.
Bradford, you are my guy. All right, you are my guy. I will charge you $2,075,000. How about that?
I give you equity.
that game was worth about $2,080,000 based on your assessment, but I will give it to you for $2,050,000. You know what I'm saying? I give you a little discount. But chat, look. I only went this crazy because we had a video come out today. All right, we had a video come out today. So this is a really good reason for you guys to go watch the latest freaking video. When you go watch it, you like it, you comment freaking chat capital bangers. All right, you show some love because this is what we do. I guarantee you, your little crypto day trading, drop shipping goofballs in high school on YouTube, they ain't cooking like this, chat. They ain't cooking like this. I guarantee you, none of these drop shippers know game like this. You know what I'm saying? They don't know no game like this, twin. You know what I mean? So, with that in mind, Shredlord, That song is a little vulgar. Now that I think about it, the song is a little freaking vulgar. Anyway, we're gonna go back to our normal outro. All right, chat. But I appreciate you guys. Take care of yourselves mentally, physically, emotionally, spiritually. All right. If you guys are spiritual, take the time to thank God today. We went to church and I prayed for y'all and hoping everyone lives a life of abundance and is focused and is locked in. All right. I'm hoping you guys have the greatest week of your entire lives next week. And I want you guys to check in with us. Let us know how things are going. Let us know how you're feeling. All right. Because we support each other. And you are not able to pursue a path of greatness alone, so find community. And you cannot do this if you don't take care of yourself, okay? So, take care of yourselves. Go to the gym, eat healthy, get good sleep, right? Surround yourself by good energy, because this stuff is hard. Like, I'm a pro. This stuff is hard, but I can do it because I take care of myself to have the capacity to build. All right? So, much love, chat. I will holler at you guys tomorrow. I think we got earnings. And as always, take care of yourself, take care of each other. Peace and love. Dale, dale, dale. I'm out. Bye-bye. And if you want this stuff, go on Discord. I'll give it to you guys in Discord. All right, love. Bye.
Sueltan en la discoteca, el primero revolú la pone toda inquieta. Es un día busco comerte en la jipeta. Vamos pa' Tulum pa' cotearte completa. Siempre haciendo conmigo, aunque sé que no estás. Somos el rollo de más que amigos. De la plata no